The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 23rd terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that you and I need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call Awaken Your Hidden Treasure. You know, every now and then I share with you a true story. In fact, this true story about two brothers who set out for the United States in 1848 from Germany. One set out to start a cabbage patch, and the other went on to school to study geology. I'm not going to tell you the full story here. Perhaps you'll remember that story that the one of the richest gold mines in California was actually founded on a cabbage patch. Well, you see, the truth is that you too have a gold mine. Each of us, you and me, each of us has hidden treasures. Some just need to be dusted off and maybe reawoken. So the question I have for you this morning, if someone gave you a magnificent birthday present and you tucked it away in a closet or a drawer and never opened it, what good would that bring to you? Exactly, not much. Now, each day at TFNN, we provide you with birthday gifts. At least I like to think we do. Each day is a new day, in the markets, and each day we use sets of tools out there to analyze what's going on throughout the entire day. All different types of contributors providing to you tools, birthday gifts, each day that you can use in order to be able to trade these markets. Each of us would love to teach you how to use these tools. That's what we do. But if you tuck them away in a drawer, what good will they do? Look at it like this. I always like to link the known to the unknown. It's the quickest way to learn. If the universe gave you a new car with the stipulation, maybe the universe would be TFNN, but if the universe gave you a new car with the stipulation that you had to pick up the keys at the dealership, how quickly would you respond to that? Exactly. I can see the dust flying off of your shoes right now, and you likely wouldn't hesitate in picking up the car. Look, folks, I guarantee you that the tools that each of us trade, that each of us teach you here, it is like getting a new car each and every day. So don't neglect and don't forget to claim the greatest gift in the world. Each day, the universe, it gives you a gift. So let's go take a look at all the gifts that the market is creating for us. But I'll leave you with this. I guarantee you one thing. You have hidden treasures within you. All of you do. Proximity is power. And what I mean by that, that's really why you tune in here at TFNN. You want to get as close to what it is that you are trying to learn. In fact, it's the whole reason that I'm even here today. It's the whole reason, because proximity proximity being power. You have to understand, I started off my technical knowledge, because I was really just a fundamental trader. I was just a bean counter. That's what I understood. And my technical skills, that came about by just simply listening to one 15-minute segment from Tom O'Brien. That was infectious enough for me to actually call the very next day, because he had a master trader course going on, to see if I could attend a master trader workshop, folks. That's what I did. That was my first foray into technical analysis. I remember speaking with Mike Comey, saying, hey, I know nothing, just like Schulte would say. I know nothing about technical analysis. And if I attend the class, if I pay the $2,500 or whatever the fee was back then, if I pay that, I'm going to ask questions. So my real question to you is, am I going to interrupt the class? Because I'm going to be asking such basic questions, and there's got to be folks that are going to this class that have been studying technical analysis for a while. And the message was, come on in. And I did, and asked all kinds of questions, and it turned out to be great, and that started my passion for technical analysis. And then I even got closer to that, because I developed a relationship with Tom. And then we started partnering and working together. And I was at the office all the time, and it was rubbing off, and then Larry, and you name it. So lots of, proximity is power. Folks, just simply whatever it is you're trying to accomplish in life, just always remember that. In any event, let's go check out the gifts in the universe right now. We've got the Dow futures. They're trading off 99 points. They're trading out at 16,217. Of course, some of you may not think that the market's giving you a gift right now. The ES Mini, it's down 9 points. It's trading out at 1829.50. NASDAQ futures down 12 and almost 13 points, trading out at 3607. Man, huge moves. As far as where are we going to start, what are we going to look at? Huge moves everywhere. You've got the King U.S. dollar index. It's off 57 ticks right now. It's trading down at $80.74 out here. The euro's had big movement. The yen has had big movement. The pound, not so much, but the pound, as we know, I think we took a look at it yesterday. If not, we'll take a look at it today, or just make sure that we do. That's breaking out above a really long-term consolidation pattern on a weekly chart. Goldilocks is perked up its head this morning. It's trading up nearly $17 out of $12.55. Silver's up 32 cents. It's trading at $20.16. Light sweet crude joining in on the gang. It's up 56 cents. So talk about moving north. How about natural gas up here? Up 16 cents, trading out at about $4.85. That's on the continuous contract that we're looking at. A quick peek around the globe out here. Let's see what we've got going on over in Europe. You've got the FTSE down 20 points. Not really that big of a deal. Not yet, at least. It's off 0.3%. DAX down 60 points. A little bit stronger move to the downside. It's off about 0.6%. It was a sea of red in Asia last night. Nikkei down 125 points, a little over 0.75%. Hang Seng off 1.5%, down 348 points. And the Shanghai off 10 points, closing out at 2137. Our call-in number is 877-927-6648. You can give me the gift of calling, and we'll be happy to take a look at your stock chart. Where do we begin? Let's start by taking, I don't know where we begin out here. Let's start by taking a look at the ES Mini out here. You can see that we are right now trading into the bottom of the consolidation range. If you are watching us on TigerTV, you see a black rectangle shape going across my screen here, excuse me, the top of which is right around the 1843-ish level. The bottom of which is where we're trading right now, right down around the 1831-ish area. We're trading at 1829 right now. So we're right down at the bottom of the consolidation. We've seen a test here this morning. Looks like a test very close to testing the swing point low inside this consolidation box. That came in yesterday. No, today's the 23rd. Came in 2 days ago on the 21st at 12:30 in the afternoon. That low is 1826.25. On the 30-minute chart, there were about 67,000 contracts. We hit that area here this morning with about 46,000 contracts, and we're bouncing. So not enough to actually bust it to the downside out here. We'll see when this market opens whether or not it can get any kind of traction. But it's a 14-point consolidation that we're trading in. If there's traction to the downside, you'll see a move down to about the 1857 level. If you're just listening on the radio, again, I gave you the numbers here where the ES Mini is trading inside that consolidation box. Guess what, folks? If it can't bust it down, if it doesn't bust it down, what's it going to try to do? That's right. It's going to go ahead and it's going to try to bust it to the upside. That'll mean you'll see another move up to the 1843 level, and we'll see if it can bust it to the upside. I'm not sure just yet which way this is going to break. Of course, you had a nice 1.272 butterfly pattern on the 30-minute chart out here. That actually hit the highs that came in on January 15th, and that was at a price level of 1845.75. That's what's going on inside the 30-minute contract for the ES Mini. If we take a look at the 30-minute contract here for the strong hands of the market, and that would be the NASDAQ. So the NASDAQ now has come back inside the consolidation range. It had been testing it. It tested it, in fact, last night at about 11 o'clock. Bounced off of the top of that consolidation range, made a retracement, looks like probably a 0.618 retracement. If we go from the swing point high at 1900 hours, that would be 7 p.m. last night, down to the low that came in here, or the test of that consolidation at 2300 at 11 o'clock. It was it was closer to a 0.786 retracement. My apology. 36.29 and some change. We got up to actually 36.29 as the retracement. Could be an A to B equals CD down. Let's go take a look at that pattern inside the NASDAQ 30-minute chart out here. There's our A point was last night's high. So you can see you've made the one-to-one A to B equals CD. Of course, you know when you make an A to B equals CD pattern. Now, in this case here, moving down with some wide-ranging bar, so we're seeing a bounce. Now let's go take a look at what the retracement is. Have we just formed a Gartley buy? Now, many of you don't have that same tool that I use on my Ensign software, but just simply utilizing A to B equals CD patterns as well as retracements, you can identify your Gartleys out here. That would be coming off the swing point low from 1130 at the bottom of its consolidation box, and that's 1130 on January 21st. If you go from that low to the high out here, and the high being the 7 o'clock time frame last night out at the 36, 35, 25 level, you will see that what we have hit is basically close to the exact 0.618. Look, 3,600 and a bit of change, we'll call it 3601, is the 0.618 retracement level. And what we actually got to was 3601.75. Look, you get a close above this bar, this wide-ranging bar at 9 o'clock. That means a price of 3615.50. If you see a close above that, then I would say that this Gartley buy pattern is in play and is working out here. So we've got the ES Mini hitting the bottom of its consolidation. We've got the strong hands forming a 0.618 Gartley buy pattern. We don't have the bullish reversal sign yet, but what we do have is enough of a pattern to say, okay, this might be it for the roller coaster to the downside on the bottom out here. If, in fact, this area here fails, then what's likely to happen? And when I'm talking about the NASDAQ futures, I would say if this area of 3,600 fails, likely what we'll see is price not just move down to the 0.786 area. Now, that would be logical, and that certainly is one possible outcome. That price point is about 35.91. I would say more likely what would take place is you would see a move down to the bottom of the consolidation box. And what would take place, because if the NASDAQ doesn't hold this level, the ES Mini will not hold its 14-point consolidation, and just the combined pressure of all of that would actually go ahead and push prices lower. Of course, what was that all about? Well, it was really all about this nice Gartley sell pattern that took place here in your favorite currency pair and mine, and that is the Euro-Japanese yen. That took place at 4 o'clock this morning. 877-927-6648. Dow futures off 101 right now. S&P down 9. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. So let's go take a spin around. We've got so much to be able to take a look at, with earnings releases last night. Netflix going to be leading the charge to the upside here this morning. Closed at 333. Last trade firing off at 389 out there. You've got the Nugget. That's the direction a daily gold miners trust. That closed at 35.18. It's now traded at 37.43 out there. Logitech LOGI. It closed at 13.22. It's trading out at 15.29. Logitech, they released their full-year guidance out here. Their net income for their third quarter was $58 million versus $29 versus about $30 million. So that's a heck of a nice move out there. Let me see if I can find their revenue number out here. Where is their revenue? Oh, I just say they're really highlighting the net income number. Looks like they expect fiscal year sales to just over $2.1 billion. They had previously announced $2 billion, but I don't know what their third quarter revenue numbers were. Pity. Let's take a look here. What's moving to the downside this morning here? Other than the futures markets, you've got Baidu. Baidu is closed at 174. It's trading at 168. Kihu 360 Technology closed at 95, 92. It's trading out at 89.60. Acceleron Pharmaceuticals, or Acceleron Pharma XLP, and it closed at 56.70. It's trading out at 51.49. Cena Corp closed at 77 and change. It's trading at about 73. C-Trip Communications, it closed at 43. It is trading at about $40 right now. Let's go take a look at what's going on inside of the commodity market. Let's go take a look at Goldilocks and silver. I think I can switch over to these charts right here. We've been taking a look at the sideways consolidation inside of silver. That's about a $2. I think it was about $2.30. It has not hit yet the top of that consolidation box. The black squiggly line going across my screen out here, if you're watching us on Tiger TV. And thanks so much if you are. If you're listening on your radio, your mobile device at TFNN.mobi, don't forget you can catch the live stream of this show by going to the homepage at TFNN.com. Upper right-hand corner, you'll see a button, 3 smartphone devices. Click on that. The show streams live, and, of course, you can catch the archive on Channel 9. And what you would see on my screen here for the daily chart for the ESMA, that black squiggly line, is the 50-day exponential moving average. That is priced out right now at about $20.50 19 or 20 cents. Right now you've got silver trading at 20.16 out here. The key line for us to be watching, I would have to say the line of demarcation right now is really going to be this little blue diagonal line going across my screen. That is the trend line for silver. So not only does silver need to get up above the 50-day exponential moving average, it needs to get above that trend line. What that number would actually equate to today is probably somewhere just a little bit north. We'll call it $20.50. So you're trading at $20.16 right now. Other reason I say that is if silver gets above that level, stays above that trend line level, let me tell you, folks, people that are pattern traders out here or pattern traders that are taking a look for trends that would be changing, that should be an area where all of a sudden folks you'll see all kinds of buy orders hit the screens out there, or you should. So that would say that, look, number one, with regard to silver, it's trading a $2 plus range out here. So if it gets above $20.50, that says that it's going to get up to about $23, $22.50, somewhere right in that range out there. Well, guess what? At $22.50 or so, all of a sudden, this thing will be running right into the downtrend channel line. So that's another line of potential resistance out there inside of silver. So it just depends on what day that takes place. I can't tell you whether that's today or not. I just know what to be looking for, what to be watching. At this stage, it's moving silver. Hey, it's nice, but it has not broken its consolidation box, much like the consolidation boxes that we are looking at and watching inside of the futures contracts, the 30-minute contracts. Now, this is a larger consolidation, right, because it's on a daily contract versus a 30-minute chart out there. So that's what's going on inside of silver. If we take a look at Goldilocks out here, where is gold? You've got gold trading up right now, a total of, about $16. It's trading out at $12.54.60. You can see that it is above its 50-day exponential moving average. That happens to price out right now at about $12.47.50. You do see another blue line on my screen out here, and that blue line, now the red line, that is what I have shown as the descending price channel. So gold is above that level, and all it needs to do, the last bit of oomph that it needs, and you can see it's in essence really run into it or very close to it here this morning. The inter-session high, 1258.20. Maybe it's just a tad higher. Maybe it's 1260. Maybe it's 1261. Let's call it, the number is... let's call it 1263. If we see Goldilocks close at 1263 today or more, well, first of all, I don't know that we'll see it close at 1263, because if it once it gets above that line, there should be some order desk saying buy, Mortimer, buy. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Heck's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Heck, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading down 140 points. It's trading out at 16,233. S&P down 13, trading at 1831.84. Composite down 27 points. It's trading out at 42.16. Russell 2000 off 6 points. It's trading at 11.74. Apple down $1.55. Microsoft down 3 pennies. Google off $9. Cisco down 7 cents. Intel off 12. Netflix leading the charge. The upside up $45, up 13%. Trading out at 378. F5 Network joining in. It's up about 9% this morning, trading up $9. Union Pacific Corp, UNP, it's up 3%, up 5.57. McKesson Corp, that is at I recall looking at that stock chart maybe a week or two ago. MCK is the ticker symbol. It's up 2% this morning, up $3.40. To the downside, Precision Cast Parts. I got to go take a look at that. That was a stock that I've been looking for as a potential buy at some point. PCP is the ticker symbol. It's the leader in the clubhouse to the downside. You see if they were out with some numbers out here, down about 3.5%. Their third quarter sales, $2.3 billion versus $2.03. So it's not the top line that is the problem. The net income line is also not the problem. They did $435 million versus $338. So maybe a guidance issue out here. Well, it must be a guidance issue. That is Precision Cast Parts. So if I don't look at it during the show, I most certainly will be looking at it. Google is off $7. Qihoo off $7 as well. Baidu down $8. YY off $6. Boy, a lot of those internet stocks here taking a little bit of a hit this morning. So we took a look at gold. We took a look at silver. Let's go check in on light sweet crude out here. Let's go see what light sweet crude is doing. Give me a moment here to go find the actual stock chart out here. I believe it was up about 50, 60, 70 cents. Let's see. It's up 42 pennies right now. It's trading out at $97. It's made the 0.618 retracement. 97.12 was the next target out there on its retracement, on its roll moving north. Now, really, yesterday's candle, nice candle out here from a power standpoint. That's really how we need to, one of the interpretations that we need to take a look at inside of candlestick charting. And that's really about a type 2, if with 2 being the strongest, or maybe we'll call it a type 9 with 9 being the strongest out here. So it's a very strong candle. And as you're coming to the wide-ranging bar, a strong candle like that into the 0.618 level, I would have to say that silver is going to want to move up to about the 98.71-ish level out here. That's what it looks like at the moment. Now, you want to talk about taking off to the upside here. Natural gas up 3% this morning, up about 15 cents. If we take a look at the, you can see it's traded off of its session highs out here. But here, take a look at this. This is the weekly chart. This is the rising price channel that natural gas is traveling in. Now, look, this is when you're already in a rising price channel and you break to the upside. That's not really a break. You're already rising out here. But the rising price channel that is traveling in normally had been acting as a resistance level. We can see that it has so far. Now, the week is not over. It's only Thursday. So a lot can happen here, and we'll be paying attention to this. But most certainly, this thing has got a nice, big, wide-ranging bar to the upside here in natural gas. Now, that takes us now back to the daily chart. And the daily chart here really prevails. We take a look at the current contract at February. And as we were pointing out to one of our callers yesterday, that natural gas looks like to me what it really wants to do at a minimum is get up to about the $5.05 area. Now, the way that this thing, let's take a look at the volume yesterday was, okay, 151,000 contracts taking out a B point 82. So that's your 1-to-1 A to B equals CD. That would be the $5.05 area. But I would have to say now the target may more likely be 535, your 1-to-1.272 area. So short of any kind of reversal, we can see here that this is getting towards the overbought condition. But it can still move higher out here, especially in a strong bull market. And if you take a look at that weekly chart, there's no argument that can be made that it is nothing but strong out here. So that's on natural gas. We take a look at the 30-year Treasury right now. 30-year Treasury, boy, that's taken off to the races here. It's already coming into the 0.618 retracement, which was 131.24. That bar there on a 0 to 10, that measures a 10 on the Richter scale as far as strength. Now, the day and the trading session is not over. But if that bar were to end like that, that tells us that the 1-to-1 A to B equals CD, well, that's going to be made. That's the 132.32 level. You'd almost have to say, well, you got to take this one day at a time, one step at a time out here. But right now, that's where bonds want to head to, a bit northward. And that's on the current chart. Let's go take a look at some of the currency pairs out here. Let's go take a look at the Queen. Let's go take a look at the Euro. Let's go see what it is doing. Now, here in the Euro, what I've been pointing out is, in my opinion, the euro is a little bit difficult to trade here because it's really traveling with inside this very narrow cone out here. This is the cone. If we take a look at the red diagonal line to the downside, this is a weekly chart now that we're looking at on my screen. That happens to be the channel line that takes you back, the descending channel line, the top of the channel line to the downside. That takes you back into July of 2008. And you can see that that is a very strong, powerful channel line. We have not seen a body close above that since the July 2008. There have been a couple of attempts, several attempts, quite frankly. Again, it's a weekly chart. We've seen attempts the week of December 13th, the week of December 20th, the week of December 27th, the week of January 3rd out there, and it has not been able to close above that descending price channel. So right now you've just got this narrow band out here. Hey, look, the euro could move a little bit, get a little bit stronger against the dollar. It can even go up and try to hit the trend line. That's the black diagonal line. But until we get a close above that channel line, and I'm not sure which way this is going to break. I do know that at the January time frame, beginning of January, end of January, January to early February, the euro tends to make a significant high or a low. And I can't tell you which one that is at this stage because we've got two strong competing trends out here, and that is inside the Queen, the euro, U.S. dollar. If we go take a look at the Great British Pound, let's go see what that is doing here. Here is the weekly chart. Now, this is a long-term consolidation, and this is big. Right now, we've seen a close above this area only once. And the area that I'm referring to goes back to January 22nd, 2010 on the weekly chart. The high there, 1.6457. We saw a break above it. That break above it was back in April of 2011. That didn't last. But for just the 1 week, could have been in 1 day, who knows? I have to go back and take a look at the daily chart. But then price came right back into the consolidation. That consolidation by this little yellow box that you see on my screen here, if in fact the Great British Pound stays above this area. Now, the only thing that it really needs to, well, it needs to clear certainly a swing point, and that would take you back to August 7th, 2009. That's at the $1.70-ish level. But I will say that this week, if we see the Great British Pound close above this area, look, if it comes back and it tests it and rejects it, then what that's setting up is it's setting up a move into about the 182 level for the Great British Pound, and we'll see all kinds of folks from England coming over here to the United States because it'll be like things are on sale. It'll almost be half off. It won't be half off. It'll be $1.80, to a buck out there, but it'll almost seem like half off. And, a beer over there costs about the same in pounds as it does in dollars here. So that is like half off. And that certainly, that's another driver, quite frankly, of real estate. You want to talk about back in the 2007 time frame when I'm speaking specifically of Florida. You may have your own experiences in the Northeast, but specifically in Florida. And back at that stage, I owned retail stores at the theme parks and Universal, Disney, and other places. And so I would be out on the golf course. Oftentimes, I might just take off in the afternoon, go play a round of golf, and just go out there by myself. And I would run into, folks from Britain out there, and they were loving being over and traveling over to the U.S., and they were buying up all kinds of real estate because it truly was half off when you took a look at the strength of their Great British Pound. Of course, then it was 2 for 1. At the peak back in November of 2007, you got up to $2.11, $2.11. So things were truly half off out there. So now we'll see if we get a break here of the Great British Pound. Time will tell. Let's go take a look at the Japanese yen. Let's look at the U.S. dollar, Japanese yen. Here is the daily chart out here. Let's see what's going on. Let's actually switch over to a weekly chart. Daily chart just shows nothing more than really just kind of a sideways horizontal consolidation that's been in place since about the middle of December. I'm more interested in taking a look at that weekly chart. Now, what we do know about the U.S. dollar, Japanese yen, well, maybe it's not the U.S. I thought I had the, give me a moment here. Maybe it was a monthly chart. No, it's the weekly chart. It's here. It's just not very dark. Let me go ahead and change that. And that is what the U.S. dollar, Japanese yen did do. So it stopped at a normal area. And that normal area was when price got up to the 0.618 retracement of the move. This is a large move. Now, this is off of the June 29, 2007 swing point high, or maybe it was the week before. Looks like maybe the week before, June 22nd, out at about 124.13. If you go from that high to the low that was put in here, and the low here was down at 75.65. That was back in October of 2011. If you go from the high to the low, what the U.S. dollar, Japanese yen did, and at 105.44 was the exact 0.618. It didn't make it there. It got up to 105.43. You got to love that. You just got to love these numbers. Now what we're seeing here is a little bit of a back off. You would expect some folks to get off of the escalator out here. If it can break above, and I think that it will break above 105.43. If we take a look, though, let's take a look at what we've seen here thus far. If we take a look at just simply the retracement off of its last leg, that would be off of the October 11th low to the high that was put in here. And this is, again, a weekly chart that we're looking at. You can see it has not even yet done a dead cat bounce. And I'm just using the shorter of the trends out here. I'm using the swing point, again, from October 18th, 2013 out here. So the back off thus far, really not that much. In fact, probably just working off a bit of a over-bought condition out here. Yeah, I mean, now what this did do is made a big, huge price relative strength divergent pattern as it made that high. But really, you have to stitch together. It's really this week here. So you have 1, 2, 3. You'd have to stitch together an entire month worth of candles before you could actually get a bearish engulfing candle out here. So it says that this back off here, I'm not buying it, as we've seen a significant top inside the U.S. dollar, Japanese yen. Let's go take a look at the euro, Japanese yen. Let's look at this on a weekly chart. We haven't done that in a while. And then we'll go take a look at some of the stocks out here. Now, what this has done, this has got above the 0.618 retracement. It did that the week of December 13th, 2013, and the swing points that I'm measuring here are from July 25th, 2008, down to the lows that were put in July of 2012. And the 0.618 area is 140.98. We're traveling at 141.56. The key line on this chart here happens to be the red line going across my screen. There we go. We're talking about red lines now. That red line happens to be the swing point high here in the Euro-Japanese yen. That was that I would have identified as a resistance point. Now, I'm using the upper boundary of that. The red line could actually be moved a tad lower just to meet up with the bodies out there. But that high on June 5th, 2009 was 139.21 out there. So long as the Euro-Japanese yen doesn't get back inside the bottom of the range, meaning get below that area, and again, I would move it just a tad lower, then what we're still seeing here is the from a longer-term basis, and the reason I say longer-term basis is because this currency pair tracks the U.S. stock market better than any other currency pair out here. And if this is going to move higher, this bodes well for the U.S. stock markets as well. You can come up with all the reasons why it shouldn't and so forth. I'm just giving you the technical aspects and the correlations that are out there. And until that correlation breaks, which it has not at this stage here, then and the proof of it is just go take a look at, this morning's action in the market. If we go back, I didn't really spend much time on it, but if you take a look at, the markets here, you got the Dow's off 137. Of course, we had the Euro-Japanese yen. Here's a 30-minute chart making a beautiful Gartley sell pattern out here. Let's take a look at the normal move of this pattern. If we go from the swing point low, remember, all Gartley patterns have a potential of 5 outcomes. It's your responsibility to go figure out which outcome it is that we're going to see out there. And we utilize candlestick charting as one of our methods for doing that. Well, what we can see here thus far during this 30-minute session that we're in right now, and we still have another 12 minutes before the session is up, you can see that the Euro-Japanese yen has breached the 141.60 level. That's the 0.382 retracement of the entire move. That's your A to D move out here. If it can stay below that, it offers the good chance that we'll see price move down to about 141.10. That should put some additional pressure inside of the U.S. Stock market out here. Now, it really broke out last night at about today's the 23rd, this morning, I should say, at 3 a.m. A little wide-ranging bar out here. So that's really the breakout session. So where this currency pair is likely to travel to, I would say somewhere right in between the low of about 141.23 to the 141.10-ish level. That is your second outcome. First outcome, the 0.382, the dead cat bounce, that has been achieved. And now we'll see if it can go and make its second level out there. So, what are we going to be taking a look at? Hey, let's take a look at the New York Stock Exchange. This doesn't happen too often, and I noticed it as I was sending my newsletter out this morning. You want to know the number of net declining issues needed today in order for the bears to take control of the New York Stock Exchange? It's 1618. Fibonacci, Leonardo da Pisa, Fibonacci at work again, doing his mystical stuff. 1618. Now it's not 1.618, it's 1618. 877-927-6648. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow is off 146 right now. S&P is down 13. Composite is off 26 points. Switched over here to the VIX index chart. If you're watching us on TigerTV, that red squiggly line, you know what that is. You know that's the 50-day exponential moving average. It happens to be measuring out right now at $13.48. We're trading at $13.78, so we've gapped up above the exponential 50-day exponential moving average. You know that the carnage in the market takes place when the VIX is above that level out there. So we truly do need to be careful. We do most certainly need to be paying attention to the New York Stock Exchange. I'll switch over to the NYSE right now. Let's take a look at what kind of price damage. No real big price damage as we speak here. In fact, let me switch over. I need to switch to a different tab out here. So New York Stock Exchange is down 0.6%. The NASDAQ 100 is down about the same. So the two strongest indexes out here are the NASDAQ 100 and the New York Stock Exchange. Now they're trading off 0.6% here this morning. Net decline in issues right now, only 1,027, 1,031. That number of 1,618, 1.618, 1,618 issues here. Truly, in order for the bears to take control of the market, that's what they need to be able to do today. Now, New York Stock Exchange I know it's doing a couple of things. Number one, it did have that island reversal candle formation out there that formed on December 31st, but that got taken out. That was rescued. We saw it close back inside there. So for me, that island reversal is just irrelevant at this point in time. It was a nice pattern out there. It was a warning shot, but that warning shot is now gone. What we're now seeing is just this little sideways consolidation box, in the wider swath, the wider breadth of the market out here. So as we take a look at this and that chart pattern, I grabbed the wrong tool. That doesn't help you, does it? Need to grab the circle tool out here. And so here's your consolidation pattern inside of the NYSE, which really shows that we have been consolidating since December 24th out here. So on Christmas Eve. And the bottom of the consolidation inside the NYSE, about 10,241.32. You're traveling at 10,299. That would be another 50 points to the downside out here. So, we've got some competition. We've got some competing patterns out here. We've got that VIX above the 50-day exponential moving average. We've got the New York Stock Exchange that is, quite frankly, still, as we speak at this moment, it is still in bullish mode. It has failed to truly break down out here. Let's go back, take a look at the gold and silver charts out here. Right now, Goldilocks up $20. Give me a moment here. Where is it? And it's at that 1258 number. Oh, ever so close, folks, to that blue line out there. That is that's the ultimate trend line, in my opinion. You can use the touch points out here. You can use the touch points of August 28th, that high, which was at 1434. You've got the high on March 31st, 2013 at 16.50. Hey, I'm not saying it's going to break this. I don't know whether it's going to break it or not. We're getting towards that moment of or moments of where if it does break it and you were short gold, don't do that. Don't be short gold, because you will see an onslaught of orders, and these will be buy orders. These are not going to be short covering orders. And you can say, how do I know this? I don't know. I'm just telling you what I believe will likely take place out here, and that is if Goldilocks closes above that blue diagonal line out there. And again, we're kind of using the 1263-ish range. It's only another $4 to the upside. That is going to grab the attention of every technical trading desk out there. At least it should. And that will send gold up, $40, $50. Well, it'll certainly send it up to its swing point from October, which is at $13.60 out here. So that's another $100 move to the upside, and that would be the minimum that you would be taking a look at. Quite frankly, you can make the case that the B point of a large A to B equals CD up is at the 1262 level. Folks, it is Terrific Thursday. Thanks so much for joining me. Always a pleasure to be with you. Have a great Thursday. Hope to see you tomorrow morning, or maybe in about 8 minutes. Take care, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.